Today in the grain market, soybeans were down again. Rising COVID-19 cases in China and the lockdowns has traders taking profits and really running to the sidelines. What's at issue is crude demand, perhaps that's going to be declining, and more supply chain delays really has traders worried. We had really a 78-cent drop from Friday's high, with bean oil dropping $5 from Friday's all-time high. These kind of things really putting pressure on the market, and this is kind of a shaping up somewhat as a decent correction. We know the market's been overbought, but it's really difficult to really send everything lower when we're kind of on the precipice of just getting things planted and springtime here. The option open interest has increased by almost 1,900 contracts. That just means there's a lot more participation in that soybean market as a whole. Today's CVOL is at 22%, with the CVOL, the soybean oil, up 1.25 to 34.1, and meal is down 2.5 to 23.4. So they're really diverging, that soybean oil and meal. Now, corn did firm up. The concerns about dryness in the southern plains is an issue, as well as the changing situation in Odessa. That's really going to be at issue with any exports coming in or out. I think there's going to be some difficulty to really get that information and digest it and see how is that going to be affecting the market. The USDA also said that 1 bushel of corn it will produce $10.25 worth of ethanol. So that's a pretty nice margin right there. That's helping to support the corn market. Now the option open interest there went down by 700, which is really nothing, because overall there's a pretty massive open interest in that options, and I think that's something to be watching going forward. There's big participation there, and the corn market is still relatively strong. The CVOL is at 31%, and the futures did is staying closer to that $8 mark, which seems to be kind of like the level that it seems comfortable at this point. Now wheat was steady today. It was a little higher at one point, then a little bit lower, but adverse weather in the northern states, I think with the possible freezing in Illinois and Iowa, that was a little bit of a forecast. The fact that the northern area has been really wet, it makes the market really challenging on what we should do, and that way it's kind of moving sideways. The channel is relatively wide at about $1.70. But I think that at these levels, it's really no surprise. And certainly with a 33-cent range today, it almost seems like there's not much happening in the wheat market, even though it was a little bit more than on Friday. But dryness in the southern plains as well is an issue with wheat. And also, what's going to be happening with planting. They really are a little bit behind last year, but it's a little bit early to tell. But that's one more headline to be digested into the market. So the option open interest is pretty moderate right now. The CVOL for wheat is down a little bit, and we're at 40.6%, which is really low, comparatively speaking, where we've been for the last number of months. But certainly wildfires in Nebraska is really something to note right now, and something to watch. Is that the canary in the coal mine? Only time will tell.